services for people buying properties, refinancing properties, building homes, remodeling, et cetera, et cetera. And every week we come on the Bridge radio station to give you some ideas on how to not only leverage your real estate or take care of it or to insure it, but best strategies on how to, make sure that you're leveraging your investment for the best purposes. And so this week we're going to be focusing again on credit. Credit is a major part of getting a home loan these days. It always has been, actually. And so we're doing a 3-part series on credit scoring, a little bit about identity theft, credit repair, et cetera, et cetera. Last week, we focused on the basics of what we call the FICO system. The FICO system is one that all mortgage lenders use around the country. There's other models out there, but the FICO system is something that we use. So we're going to talk specifically about the FICO system, which stands for the Fair Isaac Corporation. That's the company who came up with this years ago, and we've been using FICO models for decades now as far as underwriting mortgage loans. And it's very important to understand that because I had a client call me yesterday, and she had gone online, got her scores, and then she came in at 740, 747. And when I ran her credit, it was 708. And I told her my score is most likely going to be lower because it's the model that we use, not the Vantage score or some of the online scores you may get. It didn't hurt her too much, but I just want to make sure she was very clear and accurate on how that works. So let's review a little bit about the 5 areas of the FICO system or the FICO models as far as algorithms. Number one thing they're going to look for is you pay your bills on time. There's nothing more important than paying the bills on time. If you go past 30 days on any given month, on any given credit card or student loan or mortgage, certainly, your scores are going to drop fairly significantly. So make sure you at least get the minimum payment in. Number 2 is to keep your credit card balances low. If you have a $10,000 Visa limit, make sure it's no more than $2,000 or $3,000 at any given time to optimize your score. The other thing about that, some clients say, well, Mark, I pay off my credit cards every month, and that's probably true. But a credit report is a snapshot in time. So if your balance is $8,000 on a $10,000 card and we pull your credit, it's going to be different than if you were to pay it off and we run it then. So make sure you understand the cycle of your credit cards too. Each credit company is going to report typically once a month to 3 different bureaus. You'll have 3 different scores. The other third part is to make sure you have some sort of mix of credit. You want to mix a good portion of credit cards, whether it be gas cards or Visas, American Express, revolving credit lines like that. Even a HELOC is considered a revolving credit line with other types of installment loans like car loans or mortgage loans or student loans, things that have somewhat of a fixed term to them. Number 4, and this is really important, is to avoid frequent credit applications. In other words, if you have hard increase pull on your credit report more than probably 2 or 3 times a year, your scores are going to be negatively affected because they're saying, this person's looking for more lines of credit. So maybe something's not going on so well in their financial situation. Now, mortgage loans are a little bit different, and car loans too. So if you're applying for a big ticket item like a house or an automobile, you can run multiple credit inquiries and have it count as one within 30 days. So they're saying, if somebody's buying a house, they may want to shop it out. Of course, I do recommend you do that. And each lender is going to want to most likely pull your credit. Now, I don't always do that. If the client doesn't want me to do that, I'll just pull a soft pull, which means it doesn't give you a ding against your credit, but it gives me enough information I can get you approved for a loan. But if you go out there and you're applying for 4 or 5, 6 credit cards a year, that could be a negative on your balance, on your credit score. And finally, to maintain credit history. People say, well, if I don't use a credit card, I'm going to close it. And I said, no. If you've had a credit card, let's say 10 or 15 years, and let's say you haven't used it in 5 years, keep it active. Go ahead and use it. Get that credit line reestablished because it's going to be a positive thing for you on 2 fronts. Number one, the longevity of it. They like to see that you've had credit for a long time. And the longer a credit card stays with you, if you will, active, the better off you're going to be. So never really close credit cards. Because that's going to close that line of credit. It's not going to be seen by the credit bureaus, and it's not going to be a positive per se. So that's sort of the basics. And then years ago, I had a coach of mine, a mentor coach, he liked to use this phrase, and I think about it all the time. He says, "Hope is not a strategy." And he was talking about primarily building a business. You can't hope yourself into building a business or creating a profitable company. But the same thing goes with credit scores and keeping your credit active. You can't hope it. So if your scores are low, you can't just wish they're going to be higher. There has to be a strategy around that. And we're going to talk a little bit more about that today. And so a lot of folks who are in a position that where their scores are low for whatever reason. Maybe they had a bankruptcy, or maybe they've had a collection or two. Maybe they've had some late payments, and your scores are under, let's say, 580. Then you're going to need some sort of credit repair. And I highly recommend that you hire people to do your credit repair if you're serious about getting a mortgage down the road. And we'll talk about that. Now, we talked a little bit about last week. The fact of the matter is that the credit repair is a legal, it's a legal industry. Credit bureaus are regulated on some level by the FTC, the Federal Trade Commission, and there's laws and rules they have to abide by. If they don't abide by that rules, then you can appeal and correct your credit report / credit score. And there's things you can dispute on a credit report. And they say, the stats say about 70%, 7 out of 10 credit reports have something wrong with them. It could be something very simple. It could be an address, maybe that nobody ever lived in, but it could be something that shows up on a credit report that's just not yours. And there's lots of reasons for that. In other words, I had a client one time come in and I ran his report, and it wasn't very good. But he claimed, and we ended up proving the fact that he was a junior. And I forget his name, but he was the junior of his daddy. Same name, same exact name. Well, his father didn't have good credit, and some of that was rolling onto his report. And he said, "Well, that's not mine. That's not mine." Even though they're related, it's not a joint report. So we were able to take that information to the bureaus. They removed it, and his scores went way up very fast. So number one, information not based on you. It could be a relative with a very similar name, or anybody that has a similar name. These credit companies are not infallible. They make mistakes, and sometimes they will put information on your report that's not yours. I did a loan for an attorney one time, and she came in and very qualified, great credit. And we reviewed her credit report with her, and she said, "Well, Mark, this account is not even mine." She knew her report intimately, very closely. And there was about a $10,000 balance. The payment was very good. It wouldn't hurt her necessarily, but she says, "Well, that's not mine." And we were able to take that off because it just wasn't her account. So that's number one. Things that show up on a report that just aren't yours. Number two is information that's just inaccurate. And that could be all sorts of things that come to mind. Information that could be outdated. Well, I'll give you an example of information that's inaccurate. Several years ago, I applied for some credit and I was turned down, and I didn't know why, because my credit was good. So I went and got my report. This was back probably 10 or 12 years ago. And my mortgage company at the time had counted me late that month within 30 days. And it was in November. I'll never forget, right before Thanksgiving. And I said, "Well, that's not true. That's inaccurate." So I went back into my records, and I had found that I'd made the October payment on time. And I sent that information to the mortgage company. They in turn contacted the credit bureaus. They corrected it, and my scores went right back up. So that was an example where I didn't know they counted me late until I was turned down for credit. So we're going to talk a little bit about how to monitor your credit and how to make sure that you stay in tune with what people are reporting, regularly. Information that's outdated as well. Sometimes after 7 years, if you've had a collection account, let's say. Now, collection companies are kind of funny. They have the right to sell their book of business, if you will. If they can't collect from somebody, they can sell that book to somebody else, and they try to collect from you. Now, the problem when it comes to scoring sometimes is they report that as a current collection, and it's not a current collection. So you have to go back to the original collection date. And once you establish that, then they have only 7 years before that account has to be removed from your credit report. But as they sell these bad debts, if you will, over and over, a lot of times they'll report that as current collection, and they're not. That would be something that's going to be outdated and can be removed. And finally, any totally inaccurate or no valid basis for reporting. And this again, these are examples of things like that. So those are things that you can dispute. Now, I want to kind of talk about the myths of credit, repair, because it's kind of an interesting conversation with a lot of people, because it's the FICO system and the credit system in general, or somewhat of a mystery to a lot of people, including me on some level. I don't understand the behind the scenes algorithms necessarily exactly how it works, but we know enough to be able to help our clients usually improve their scores enough to either get a better rate or lower their MI, or maybe get a better insurance policy, et cetera, et cetera. So we do credit counseling, but we don't do credit repair as a lender. Matter of fact, I don't even think that's legal to do. So that's not something I touch on, but I do a lot of counseling with people on how to move from, let's say, a 640 to a 680, or in one case from a client from a 776 to over 800 to get them a better rate. But the first myth is that credit bureaus are a branch of the government, that they're infallible. And that's, of course, simply not true. We've talked about this a little bit even last week, that these are private companies. Equifax, TransUnion, and Experian. These are companies that are in business for a profit. They're for profit. They're not nonprofit businesses either, and they're certainly not governed by the government or a branch of the government. And they are regulated, as we've mentioned. So matter of fact, they've paid fines over the years because they have not performed as they should. And attorneys, when they get involved with credit bureaus, are going to be pretty tough. So that's why you may want to look at hiring a credit repair company who has a solid book of attorneys who can fight for you. So in other words, that's simply not true that they're a section of the federal government. Number two myth is, when I pay off a past due account, such as a charge off or collection, that it'll show paid and no longer be negative. That's also a myth. People say, well, if I pay $500 to Macy's when I had a collection, then it's going to be taken care of and take it off. It's good. Now, where it comes into play a lot of times is if you contact a creditor and you owe them some money. And there's two things you may want to talk to them about. Number one is negotiating that bill down. So if you owe $1,000, you may say, I'll give you $500. And a lot of times they're going to take it, because if it's in collection, it's better than nothing. And secondly, you may want to negotiate with them. Say, yes, if I do pay you this, will you remove this from my credit report? And you can get a letter from them that states they will. If they send you that, by law, they have to take that off. If they take it off your report as a collection, it will no longer show up. If they won't, and you still want to make good with them, at least show a zero balance, then it'll still show up as a negative. Now, if it's a recent collection, it's going to hurt you a lot more than it's going to over time. So if the collection's on your report 2 or 3 years down the road, it's not going to hurt nearly as much. Over time, as you build credit, there's two ways of building better credit. Number one is to stay current on everything, keep your credit good for as long as possible, obviously. And second, over time, to let the bad credit sort of fall off and fade away. I've had clients, even with bankruptcies and foreclosures, over time go from the mid 500s to the mid 700s over a period of a few years. So it can certainly be done. But even if you pay a past due, a collection is still going to show up as in that category of collection. The third myth I want to kind of talk about is nonprofit organizations. There are credit counseling organizations that I think, in my opinion, are trying to do a good job, but they don't really help people as far as what we're trying to do here. A credit counseling service, well, what they do is they negotiate your debt with your different creditors. So let's say you have 5 credit cards and you're behind on them because you can't make the minimums. They'll go in, they'll negotiate that you lump sum into one payment over those 5 companies, if you will. So they're going to be getting something. And as long as you're making payments, it'll show that you're making payments, and ultimately you'll pay them off. But in the meantime, they still show late payments all the time because you're not making the minimum. Same thing with the mortgage loans. Some people think if I make at least a partial payment, then it won't count against me. No, that's not the case. The case is if you don't make the full mortgage payment every single month, you're going to be counted 30 days late. And that's called rolling 30s. And every month, unless you make the full payment, it's going to be against you. Same thing with consumer credit counseling. We actually can't even do a mortgage if somebody starts at a credit counseling program. We have to wait. It's kind of like a bankruptcy. You have to wait a certain amount of time. And after time, if you've built additional good credit on the side, then after a year or so, we can get a letter that states that based on this payment history, we can help you get a mortgage. But initially, it's not a very positive thing. So that'd be number 3. Number 4 is that credit repair companies can instantly fix your credit score. And that's usually not the case either. Now, sometimes, and we talked about this last week, the credit system is very fluid, which means that every day can change. So anytime your profile changes on any level, whether it be a paying down a card or you credit or that you charge against a credit card, or if you get new debt, every single time you would pull your credit, it's going to change a little bit. In credit repair companies, if you really need help, and I've got some referrals. Matter of fact, next week we're going to have a woman, a friend of mine who is in the credit repair business locally here in Austin. And she's going to talk more specifically about how it works because that's her business. So I thought it'd be good to have a guest. This is a 3-part series. Last week we talked about the basics. This week we're talking a little bit more about credit repair and identity theft. And next week she's going to come in and kind of talk specifically about how the system works. So if you need her help, she'll be available to you. But again, credit repair companies is a gradual process. Usually, my experience, it takes 6 to 9 months to build a credit profile. If depending on the situation, usually 6 to 9 months to build a profile that's going to qualify for a mortgage loan. So again, it's not an overnight fix. So that's why I recommend people, even initially, they call me and say, "Well, Mark, I'm not looking to buy until maybe next spring or 6 months from now. I just signed a lease." Or even next year sometimes. So I say, well, that's fine, but let's go ahead and look at your credit today. We can do a soft pull. We can get a good idea of what it looks like. So if there's any problems, we've got time to fix them. And I recommend that to anybody. Most people, by the time they call me, they're looking to buy in the next few months, which is great. But if you're not, go ahead and get your credit run by a mortgage lender. Don't go online to Credit Karma or any of those online services. Get a FICO score through a mortgage company. Now, you can actually buy your own FICO through myfico.com, but I'll run it for free. It does cost if you go to them. They charge, I think, $15 a bureau, and you want to make sure you get all 3 bureaus. Number 4 is you need to hire a credit. Number 5 myth is you need to hire a credit repair company to fix your credit, and that's not true. You can do it yourself. It's very timely. The beauty of a lot of times the credit companies, they have attorneys that will write the letters for you. And if you send mail through an attorney through certified mail, they're most likely going to respond than maybe if you did it yourself. But it can be done. It's not that difficult per se. It's not hard. You just have to take the time to do it and do it right. There is a system and a follow-up around that I can help you with. And so that's a little bit about the credit repair, area. And then finally, today I want to touch on identity theft, because identity theft is called the fastest growing white collar crime in the country. And the stats show as of 2020 that 9 million people have been victims of identity theft, resulting in around $50 billion in losses. So it's a huge conversation. And companies, credit card companies are getting a lot better at it. Like a lot of times, if I charge something that on a vacation and I'm in an area that they don't recognize, let's say I'm in California, sometimes, not all the time, certainly, but sometimes if I charge something, the credit company will text me and say, "Is this you?" And I'll say, "Yes, it is." I respond with 1, and then then it goes through. So they're getting a lot better at monitoring credit card usage. A lot of the companies are. But the fact of the matter is there's a lot of thieves out there, and there's lots of ways they gain information from you. One of them is what they call phishing, which is emails that you're going to get. I get emails all the time that I know are phishing because they're coming from Amazon, or they're coming from Google, or they're coming from GoDaddy. If you look at the URL or where it comes from, it's clearly not from those companies. They look very professional, but do not ever hit a link that you cannot verify that it comes from somebody that's going to be valid. Um, the other thing they do, and I'm not guilty of it because I have no choice, but all the properties I have in Austin, we have mailboxes. Now, some communities are smart enough to have a central mailbox, where the postman will go to one area. But in my properties, they still drive the streets and they put it in your mailbox. Well, it's very likely somebody could just fall behind, kind of like they do with the packages from Amazon, and steal your mail. That's one way they can gain access. So I usually recommend just use online statements. Don't have a hard copy statement mailed to you like we used to do in the old days, because it's likely that somebody may be able to gain access to your credit cards. So detecting identity theft would be, make sure you check your credit card balances regularly. Even if you have online banking, go look at them every month. Subscribe to some online monitoring services like identity. There's a online service that you can do. Also, freeze your credit. Freezing your credit is something you can do directly through the credit bureaus, and it doesn't allow anybody to pull your credit. So, example, I had a client call me Friday or last week, and I was going to pre-qualify him, and his name was Tony, and I pulled his credit and nothing showed up, so I called him. I said, "Hey, do you have a credit freeze?" He goes, "Oh yeah, I sure do. I forgot to tell you." He says, "I don't use credit very often, so I freeze it." So he had to contact the 3 bureaus, unfreeze it for 24 hours while I did my business, my work, and then it goes back automatically frozen. So if you have a credit freeze, I highly recommend that, and you have to contact the different bureaus to do that directly with them. And it's a way to protect your credit long term from any sort of identity theft. Um, so also watch out for unexpected phone calls from people looking for information like that you've been approved for this or that. And if they want sensitive data, don't give it to them over the phone. Um, review your paper statements. Also get your FICO scores and credit reports. And so there's annualcreditreport.com, which is a free report that's designated for everybody that wants to look at their credit to see what your credit profile is today. And anybody can pull that using your own Social Security number and, of course, date of birth. And you could pull that annually to see, what is being reported. That way, you don't have to come to me for that. That's something you can do yourself at home. And that's a system that's available for everybody to use to make sure that what's being reported is accurate. And again, so there's credit services, credit monitoring services. Like I use a company called LifeLock. And LifeLock is just one of many where you could pay a subscription fee, and they will notify you if something happens on your credit report that you don't know about. And they'll also insure it. So if something does happen, they claim that they're going to pay the necessary steps in order to get that corrected. Because if you have identity theft, I had a client come in about a year ago, and he had about $50,000 on his credit report that wasn't his. And because his identity was stolen, he had a car. Somebody bought a car under his name and Social Security number in Arizona. He had several credit cards, and so it took about 6 months for him to get that cleared up. So it's a big problem for people these days, and I don't see it that often, but I got a call from my bank last year or 2 years ago, I forget now, and they called me on the phone and they said, "Mark," Mr. Hairston, they said, "Somebody is accessing your account. Somebody went into my account and stole $3,000." And we got that handled because it's insured, but I had no idea what they were talking about, that somebody was in my account. It certainly wasn't my wife. So, managing credit is really not simple, but these are the keys in managing credit and protecting credit. Is number one, pay your bills on time. I keep repeating that, but that's an obvious, but I one time, not one time, a few weeks ago, I was notified by my credit card that I had missed the payment, and I just forgot. Now it wasn't 30 days late, so it's not going to affect me. It did cost me $40, but make sure you have a good system of monitoring your debt. Also, pay more than the minimum payment if you can. Now, if you can't pay more than the minimum payment, then do that. but if you can, that the credit bureaus like to see that you're paying more. And also, if you do it on an automatic draft, that also says these are responsible people, and your scores could be reflected positively there. Ask creditors to increase your credit limits. Keep all your accounts open. I keep saying that. Keep them open. Use them occasionally. Guard against identity theft. We talked about this. There's ways of guarding against that. And again, keep your balances below 30% for sure, if not 20%. So we're fixing to wrap this week up. I hope that was helpful to you about how to keep your credit scores good and managing your credit. And again, my name is Mark Hairston with Texas Mortgage Source. If you have any questions for me, please reach out. My phone number is 512-789-6967. And until then, have a great day. We'll see you next